Stocks are off to a terrible start in 2022. What's next? Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. By all traditional measures, stocks have been overvalued for a long time. One could have made a powerful case for a bear market a year ago, but it didn't happen. Equity indexes instead boomed. Is the current weakness just a road bump on the way to new highs? The bullish case boiled down to the massive amounts of cash in the hands of individual and institutional investors, a powerfully rebounding economy from the COVID lockdowns, and ultra-low interest rates. But conditions have changed, primarily inflation, rising interest rates, and an economy weighed down by both supply chain bottlenecks and growing government regulation. And there's the ominous possibility of the Biden administration botching an international crisis. Ukraine now, soon perhaps Taiwan, and Iran successfully racing to develop the bomb that could have profoundly serious implications for our security. With the Federal Reserve promising to turn off its fire hose of money creation, old-fashioned metrics such as price-earnings ratios that have been long screaming excessive stock prices are finally bringing markets back to the real world. In fact, the once seemingly unstoppable rise of big tech companies diverted attention from less than stellar performances of numerous other stocks. For example, over 200 multi-billion-dollar stock companies are each down more than 20% this year. Here are the headwinds. The Fed doesn't know how to fight inflation and may well overreact, especially after spending most of 2021 poo-pooing worries over rising prices. There are two sources of inflation: monetary, that is printing too much money, and non-monetary, such as the shortage brought on by the serious disruptions of the pandemic lockdowns. Our central bank can't unclog ports in Los Angeles or conjure up more truck drivers, but it can stop messing with the dollar. It should immediately end its binge buying of bonds, which it pays for by conjuring money out of thin air. Simultaneously, the Fed should start reducing the astonishing and dangerous amounts of short-term money it borrows from banks and others. What our central bank should not do is rapidly raise interest rates. Instead, it should let markets set the rates lenders charge borrowers and cease its version of monetary rent control. Unfortunately, the Fed believes you can only curb inflation by slowing the economy down. Wrong. Just keep the dollar stable. As for the shortages, government should now treat COVID like the flu and focus on therapeutics and vaccines. No more lockdowns, no more mandates for masks or even vaccines. Use persuasion, like Spain successfully did with vaccines. Let economies here and elsewhere heal themselves. Unfortunately, governments and central bankers are likely to be hindrances rather than enablers of future prosperity. Investors beware. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions, and I look forward to being with you soon again.